All right, ladies and gentlemen, hello, and well, I wouldn't say good morning, or actually for me right now it's good afternoon when I'm recording this video. But look, ladies and gentlemen, welcome. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. Look, I wanted to pick up on the commodity sector because I didn't really specifically pick up on that one. I haven't done a video specifically on commodities for quite a while now. So, but to be honest, we were quite preoccupied. We had a lot of movement in politics. We had a lot of central bank kind of things happening, and actually we're not done with that yet because next week we're also having some more central bank activity. So look, I think it's a perfect opportunity right now when everything kind of after the it's settled in between the big announcements between the big central bank announcements. So look, I'm gonna pick up on the commodities, what's happening right now, and there is something to talk about there certainly. Before we go any further, as always, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. So yeah, basically, I'm gonna try to squeeze a lot of information basically on what's happening and what's happening on the charts as well with the top traded major commodities. Also, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, of course, gold is our number one commodity, at least for now, it seems like that. But it has not been the number one lately. It kind of got outshined by silver, which I'll jump into in a bit. So gold, we're seeing that it's kind of actually moderately moving sideways from the beginning of December. We're still knocking on the door of that barrier here of this key area of resistance, which I have highlighted here, which is roughly between the 4,245 and 65 levels. Well, in a way, we can say that the 4,250 zone is the one to watch. But again, I do like the two levels right there. So if we do eventually get a clearance of that one, then great, wonderful, more buyers could join in. So it's, at the moment it seems like market participants are kind of shifting a little bit more towards silver, or actually have shifted already towards silver. And gold kind of maybe because of the higher valuation, it's not as appealing as everybody would like it to see, maybe, or let's say not everybody but the gold bugs would like it to see. So for now, from the technical picture, from the technical side, you can see that we're forming something of a triangle, ascending triangle pattern, which according to all the TA rules tends to break to the upside. However, my problem is that in a way, given that we had this up move first here, a strong up move in around like mid October, up to mid October, then we started selling off very rapidly. And basically, if we do go from just purely from the technical analysis rules, then what we see here is that the prevailing trend before getting into that ascending triangle formation was to the downside. So the greater chance for this one could be a breakout lower. That said, now this is where we're trying to now weigh in which one's gonna outweigh which. Is it gonna be just the ascending triangle pattern, which is more of a bullish pattern, or actually we're looking at the prevailing trend? So again, but you see the problem is that the prevailing trend is actually not as big, like not as strong. That said, maybe it will still carry significance. So that's why at this point, I think, in my opinion, I will wait. I will wait for the confirmation breakout. If I get that clearance of that 4,000 kind of 250 zone, and maybe just an additional confirmation of a break above the 4,265 area, if I can get all that, certainly I'm then targeting the all-time high again, which is currently at around 4,381-ish zone, and then so on and so on. Maybe if we break that, maybe I'll start targeting the 4,500 level. However, with that scenario, it's a little bit tricky because look, if I draw my beloved Fibonacci extension, let's say I'm going to draw it from here, from the lowest point of, the low of the 19th of August to the current all-time high, and then to the lowest point of, or actually not the lowest point, but the low of the 28th of October, because that's not the lowest point of October. I think the lowest point of October is around here. This one, the 3,886. Nevertheless, so what I see here is that I do have some interesting levels on the top here. The 50 is around the 4,420. The 61.8% is around a beautiful number of 4545 level. So that's what I'm saying. So it could be this. It could be this option, to play around if we're considering higher levels. So yeah, for now, I think I might stick to that, only if we do clear the 4,000, kind of this highlighted zone, 4,250 zone ish. The under 4,250, I will actually mean this whole kind of area. But if we do start to see a sell off, then maybe we could see a nice good push back down. But again, I need to see a confirmation break below this upside line drawn from the low of the 28th of October. This way I'll get a little bit more comfortable with the downside. So just a quick jump off from commodities, basically why we could see still a drift lower in commodities is the fact that maybe, just maybe, DXY could find support somewhere here. Now we're saying yes, it is declining, but maybe, just maybe, we'll see a little bit of retracement here, back up, and this way maybe it could support the idea of the commodities going a little bit lower. But again, let's not rush into things, okay? If I draw my Fibonacci on DXY right now, we'll see that we're currently testing the 50%. So if we do hold above that, like 50% here on the Fibonacci retracement, which is drawn from the lowest point of September to the highest point of November, then then like I said, I'll consider a rebound back up here and so on. Sorry about the abundance of lines, but basically we're trust my word here, we're around 50% on the Fibonacci retracement, which is drawn this way. Again, it's all subjective. We try to find logic everywhere. So we're trying to consider all the different options. Nevertheless, going back to the commodities, but yeah, that's the situation with gold. Silver is come on, switch on. Silver is on fire. Look at this. As we speak, we're just creating new all-time highs. This is, in a way, a little bit ridiculous, I would say. But hey, look, the 65.91 zone is becoming quite an interesting target. Look, 61.8. We tested that. That's basically on the Fibonacci extension, which is drawn this way from the lowest point of April, basically the lowest point of this year, to the kind of previous, to the highest point of October here, and then to the lowest point of October. Is this again? This is the lowest. This one is the lowest point of October. So it's a good Fibonacci extension. We did respect the 50% here nicely, and then we pushed higher, so we're clearing the 61.8. So the question is actually, are we gonna end up traveling all the way towards that 65.9, or is this way too much? Look, in my opinion, let me get rid of this Fibonacci extension. And what I'll say is this. And if you watched my videos before, I already talked about this several times, but I'll talk about it again because look, this is ridiculous. This is just insane. We're actually repeating history again, in my opinion. 1980, last time we had such a radical move to the upside. Then we repeated that in 2011, and now we're having that moment again, the 2025. Is this gonna go down eventually? Yes, but do we know how far it could go still to the upside? Look, I heard targets of 65. I think it was Morgan Stanley or J.P. Morgan. I can't remember who was it. But look, eventually, yeah, it could. It could. Don't get me wrong. I'm not really discounting that, but certainly, is this overbought? Just purely from the, I don't know, logical side, how much more can you go higher? It eventually it will have to decline. Don't get me wrong. It's not really something that could go on and on, because yes, fantastic, silver is needed everywhere. It's a good conductor. It's used in electronics a lot. However, keep your eyes on the AI story because today we got Oracle. Actually, yesterday we got Oracle earnings. They disappointed because they said that there's not much justification for the whole AI spending, and which I kept on saying, and I think I'm not the only one who's talking about this. But anyway, the market seems to be like kind of ignoring that. But yesterday we had the Fed as well, and the market kind of is loving the whole positivity around the Fed's interest rate cut. That said, the Fed did not promise more than I think two cuts next year. Look, if that's the case, then this is where the precious metals could slow down a little bit. It's maybe they're hoping for more, but again, at the moment, I think we're not going to see more rate cuts. Maybe all the way up until April. Let me just double check very quickly this. Because look, January is the next meeting. We're expecting to see the rate to stay the same. March time, still the same projection. The higher projection is for the rate to remain the same as it is right now. April time, now that's when we're seeing a shift towards a possible rate cut. So if that's the case, like I said, I'm kind of leaning a little bit more towards the idea that maybe we'll see a little bit of a retracement back down going into the beginning of next year. And again, the whole AI story as well needs to calm down. So if that calms down, then calms down, not comes down, but calm, getting calmer, calms down. And if that does that, then certainly I'm kind of expecting the precious metals to drift a little bit lower as well. Look, I talked about my theory on metals as well, that if the times go rough, it's yes, they do they are seen as safe havens, but again, when the times go rough, actually they get sold because in a way the governments the governments are the biggest holders of these metals, and in a way they kind of need some cash, right? You can always switch on the printing machine for sure, but if you don't wanna, you can get some you need to get some money from somewhere. And why not to sell some of the peak? You will have another governments will have another moment in life to buy cheaper prices again. So but why not to get rid of this at the peak? So that's what I'm saying. At the moment, where is the peak? We don't know, but certainly the fact that this is very parabolic, I mean, to me, this is a red flag, and I might be that contrarian who a lot of people maybe don't like, especially the precious metal bugs who love gold and silver. I do love gold and silver as well. However, I do believe in some sort of logic. So, long story short, for now, yes, I think more upside could happen. Certainly, I'm not denying that, but being a little bit on the careful side here because to buy silver, to buy gold, or actually to buy silver at these levels and kind of keep it as a store of value for the future, I think that would be really wrong. So it needs to come down in order to become a little bit more attractive again. Platinum, very quickly on platinum, this one's stalling a little bit here. In general, it's interesting, but I need a confirmation push above the 1,731. Palladium as well. This one kind of got back into this little range, and actually on a weekly chart, I think it looks a little bit better. There we go. So we're back inside this little range that I talked about previously, and well, it's interesting actually. If we're gonna see, a failure to break back above the 1,486 here, well, I'm considering a little bit of a retracement back down. Now, copper is interesting. Copper is rallying again, although we saw copper kind of retracing a little bit here to the downside, and the market was kind of loving the fact that it was finally a little bit correcting lower. But look, you need just one signal from China where it will say that oh my God, like the economy is not actually we're not seeing that much demand, so that's why that's where the kind of the problem for copper could arise. At the moment, all the economic data that we're getting from China, like for example, we had the trade balance, which was fantastic for China, but once we, like I said, once we start seeing again reports on lower demand in China, then that's where, like I said, copper could in a way retrace back down. And also, the fact that maybe there's going to be some more tariffs going into next year on copper imports into the U.S. Then that's why we're seeing this little moment why right now copper is rallying, just because purely of this demand, and the fact that, like I said, we had the same scenario before when we saw US applying tariffs on copper, and eventually then they quickly, the price shot up radically to the upside. That was back in October time. Yep. So we saw this major rally, but then it quickly overturned that because they said that oh, you know what, it's not going to be on raw copper. It's going to be on like semi kind of finished materials, copper materials, and there we go. So then we saw a major decline, a big quick shift to the downside. Look, is it market manipulation? Kind of. But anyway, for now we're seeing a good move here, a good rally to the upside, and like I said, I'm just waiting for something related to China, China's demand or U.S. tariffs coming out, and then we'll see maybe a little bit of a reversal back down. We'll see again. Jumping into soybeans, actually, very quickly, these have been declining, and I think that this is where the disappointment is coming through because. Look, China is buying from the U.S., but not at those levels that maybe the U.S. would like it, for China to buy. So, um, we saw that initial rally. That was great. That was good. But like, look, from the technical perspective, it fell back below this area, the highlighted zone. It was a good area of resistance for me before. We cleared it. We pushed higher, but then we formed something of a possible head and shoulders pattern. Look at this beautiful thing, and we broke it to the downside here. It made a beautiful move. Maybe we're currently stalling near this key area of support, but if this gets cleared, again, if we're gonna drop and close, let's say at the end of the week or maybe the month below this territory, honestly, I'm considering further declines. Uh, okay, quickly on oil, you can see that it's declining, and for those, how to say it, blame the peace plan between Russia and Ukraine and the U.S. Because again, let's put it this way. I mean, it's a good thing that wars needs to stop in general. That's like, but the fact that oil is drifting lower, it's because we don't have much demand. Well, we do have demand, but it's, let's say, on the lower side right now in the world globally. And if you're gonna increase the supply, you're gonna get this chart. You're gonna get this picture. And we already had oil on the lower side because OPEC kept on producing, kept on increasing output. And of course, now they said that they're going to slow down a little bit with the output, which is fine. But I think that they already knew that maybe the peace plan was coming up, and that means that there's going to be Russian oil back into the market. It's going to go back into Europe, and yep, there we go. Congratulations, we're going to see some lower oil prices. Long story short, from the technical picture. From the technical side, I talked about this before, and I said, look, we have this upside line which is drawn from the lowest point of April, and we are once again testing it. We did that back in at the end of November. We're now doing that at the beginning of December. So let's see if we can clear this line. If we can clear this line, and if we can drop below this little hurdle here, this 57.10, then yep, I think that further declines are possible, and my target, which is at around $55, could be reached. So I have been talking about this for probably from the beginning of this year. So so far so good, and I think I'm going to stick to that. I'm still a bear on oil, and I think that there we could see some lower levels. So the first target for me is around 55, and then we'll see, maybe we could end up traveling towards that 50. But then again, that's for now. Let's see what's going to happen in the near term. First, let's deal with this 57.10 zone and this upside line. And yeah, natural gas, very quickly, ladies and gentlemen. This one is drifting lower. Look, there is Of course, slightly warmer weather because of the in the U.S. right now, so slightly warmer weather. That's that's kind of drive what, and in Europe as well, and that's what's driving the natural gas price down. Also, the fact that there is speculation that natural gas from Russia is going to come back more, and basically there we go. So we're going to have an increase in supply as well. And look, which is all, this is how market economy works, demand supply. But yeah, for those who are long natural gas, I think that, look, you need to be very careful right now. I think we're seeing a nice little retracement here, so let's see if we can get a hold up near this upside line. This is a short-term tentative upside support line taken from the low the 4th of November. If we get a clearance of that line, then don't get me wrong, I mean, this is where it's going to go further south, in my opinion. So for now, I'm leaning towards the downside. In general, my target was reached. I was aiming for the 5 level. We hit that. We hit actually 5.5 almost, and now we're drifting back. I think the four target is quite doable, maybe even slightly below that. So, ladies and gentlemen, thank you very much for watching, listening. That was just a little quick commodity update from me. Hopefully, you enjoyed the session. As always, ladies and gentlemen, stay safe, have your stop losses in place, risk only what you can afford to lose. Don't overtrade, and everything will be fine. And I shall see you in my next little video update. Bye for now.